Table, and today I'm joined by Jeff Zananiri, Adam Sarhan, Roger Scott, and Jeff Yasteen. Gentlemen, welcome.
Hello.
Thank you for having us.
You bet. Hello. So interesting revelations over the weekend in terms of New York Times published an article suggesting that Mr. Trump has underreported his taxes, and in fact has only paid $750 in the last 2 taxation years. Do you think that's going to have any effect on the electoral outcome? And let's start with you, Jeff Zananiri.
I think this is the latest in what has been just like a never-ending cascade of seemingly nefarious headlines that end up fizzling out and have little effect. I think tomorrow night's debate is going to have a lot more effect on who the markets perceive the winner to be. If the article had some substantiated evidence that he was a tax evader, not just a crafty, shitty businessman, then you would see more of an effect. But I don't know who here would like to show, their weird write-offs, etc. We're all business owners. This is the way the system works in the United States. For me, it is what it is. I have my biases and my leanings, but the people that let me put it like this: the people that are outraged by this have been outraged by everything the Orange Man has done. The people like me that are like, yeah, whatever. Yeah, I know the guy underpays taxes and talks about being richer than he is. We're kind of like in the middle. I think the bigger driver is going to be how these two guys match up, how he answers that situation. And I'm looking to see what Joe Biden offers in substance. I want to hear what his policy is. It's not enough just to be the anti somebody or against somebody. At some point, people vote for something. Everybody goes into that booth and they say, well, I want this policy. Mm-hmm. And I think Mr. Biden is kind of short on that to date.
Yeah. And we haven't seen his tax returns, or have we?
You got to have a plan. You don't just get to win because you make people feel good and they don't like the other person. This isn't 12th grade. Sure. People vote for their own book, and you got to have a plan for what this is going to be like and how that's going to, affect each individual.
Sure. Adam Sarhan, how do you feel about the revelations?
I like to listen to the market, and the market's speaking very loud and clear here and shrugging it off. It's just a non-event. The Dow's up huge, NASDAQ's up huge, S&P's up huge. In fact, there appears to be a significant near-term low put in place last Thursday. And all that matters to me as an investor is what the market is doing, not what someone thinks the market should do or what some other opinion is about this or that or the other thing, just to filter out all that noise and focus on the market and what's actually happening right now. For now, the market's just shrugging it off. It just literally doesn't matter. And like Jeff had just said, the reality is we'll know after the two go face to face. And we know what Trump stands for. It's real simple. Keep America great. Make America great again. What does Biden stand for? It's a big question mark. And it's not a political statement here or there. It's just the facts. I mean, there is right now, it was like we've seen this pattern before. It's very clear what Trump stands for. It's very clear what his economic policy is. You agree, disagree, that's up to you. But the market likes certainty, and Trump gives the market certainty. And that's what we're seeing reflected in the market.
Sure. Roger, what do you feel?
Well, I want to remind everybody exactly 4 years ago, the New York Times did exactly what they're doing right now, except that it was exactly a month before the election. And it was the sex scandal. It was the bombshell article about Trump, and the market completely shrugged it off, and it didn't impact the election. And it's almost like we're seeing the exact same thing happen as 4 years ago. You guys remember this? What was it? Was it the what was her name? God, I can't remember the name. The stripper.
Stormy Daniels.
I believe it was Stormy Daniels or something. It was one of those things, and it was on the news for a day, and some guy got fired it was the live recording. It was the live recording that he did in the trailer in Access Hollywood. That was. They released the audio recordings, and he was being very, he was like, it was like two guys talking. It wasn't a big deal. And they made like the biggest deal out of it. And it was on the front cover, and people thought his chance of winning the election was going to be over, and it disappeared just like that. Hardly anybody remembers it now. But I see the exact same thing happening again. The truth is Biden doesn't have, here's what I've been hearing from a lot of people. And again, I don't want to get too political. This is a financial discussion, but right now we are, we're in debate watch. I don't know what Biden is going to be doing. I don't know what he stands for. I had to look up on, I was Googling last night. My wife and I were talking. We were driving back from Hilton Head. We were talking and we were like, do you know what his views on marijuana is? Do you know what his view? Nobody really knows what it's like a mystery in a box. So it's hard. It's really hard for me to kind of see where he's going. I think the debate is going to say a lot more than all of these conjectures. And most of these innuendos about Trump, his taxes, these are things we know. These are things we know about him. There's nothing new here.
So Jeff Yasteen, do you concur with the tone generally here that it's a big nothing burger?
Yeah, the president is a polarizing figure, and I think the news from the New York Times just confirms the worst that his opponents believed, and I think it confirms basically the worst that supporters believe, and ultimately, it's not going to influence the outcome of the election, unless it's something that those sort of undecideds in the key states are somehow really going to be swayed by, and that's the part I don't think anybody really knows yet.
I think it could backfire the way, if I was a taxpayer of heavy obligation each year, I would certainly be reconsidering any vote I was directing towards Biden, given the fact that Donald has mastered the $750 tax return. I mean, boy, but let's leave that behind. Let's talk about the effect that that's having on the market. And I think that, what we're seeing in the very positive performance in the markets this morning, that it is a big shrug of the shoulders and nobody really cares. And in fact, just like the economy has nothing to do with the stock market anymore, I don't think the election has anything to do with the stock market per se. Doesn't matter who wins. The market's all about where's the liquidity going, what is the hot asset class that we should be buying, and where's the trade. So on that spirit, Jeff Z, let's go back to you again. What's the most attractive thing happening in the market for you today?
Well, so today is kind of like the extension of the latter half of last week's rally. This isn't a new rally. This is an extension of the rally, and it's kind of fading, frankly. Pre-market, we were bid more. We were having some of the most liquid buying event, huge moves in Europe today on less pessimistic news, if that's possible. HSBC Bank, which has been destroyed, a stock that, I've loved to be short. I got out of the short. Roger's been somebody that's been shorting it. It's bounced like 9% today after going down like 30% in a straight line. And what I'm looking at is this market's going to stay choppy. I've been talking for a month now about the dollar as being a key indicator that I'm using right now. And dollar strength has been something that's created weakness in base metals, in gold. It's created weakness in exporting companies in the United States. And so I'm watching the dollar move, the DXY, to continue. There's a 200-day moving average I think it's going to challenge. If you look at the DXY, it's around 94-ish right now. Gets back above 95.5. I think that could be another swoon for the market back down. The stocks that have rallied the market the past few days have been the stay-at-home names. They've been, once again, people are going back into those and they're clamoring for those stocks that are expensive, that are crazy, that don't make sense, that are disassociated from the economy. But guess what? The appetite for those stocks has not waned, and it will not wane, because people have a psychological tendency to think those are the stocks that made my neighbors rich. And I missed that move last time. So maybe this is the time that I'm going to get rich on that. And you have to have a lot more than a 10% correction after a 50% move to destroy that psychology.
Mm-hmm. Okay, Adam, what do you think?
The market rally is faded a little bit this morning. It is an extension from last week, like I just mentioned, from last Thursday's low. And as long as last Thursday's low holds, I agree with Jeff, we're going to be moving sideways, I think a little bit higher once we get past some of these debates and we get more clarity and certainty with respect to the election. Under the surface, I'm seeing some constructive action. The biotechs appeared to have bottomed. A lot of the stay-at-home stocks haven't even budged, like Jeff just mentioned, and that's a bullish sign. if you can't, I mean, one way of separating leaders or alpha stocks or just strong names is looking at a correction or a pullback and just looking at the stocks that just don't go down. And we've seen that. Look at Zoom, look at Peloton, and these are all trades that are in with the members, and these stocks are doing exceptionally well. So if they can't go down in a weak environment, what happens if we get just a level environment, or if we get a strong environment? These stocks are going to take off even again, and the rally continues for them. So from my standpoint, as long as last week's lows hold and we get more clarity with respect to what's going to happen here, most likely Trump is going to win, unless if we see a major type of clear factual evidence that changes that. The market's acting perfectly fine. You had a huge rally in 6 months. You pause to digest it in September. October could be another choppy month. November comes around and the rally continues. As long as last week's lows hold, I'm still bullish.
Sure. Jeff Yasteen, what do you think?
Yeah, I sensed the market was kind of shifting gears late last week, as Jeff C was saying. And frankly, I like the action in the bank stocks. I think they're bottoming. I like the action in the oil majors. I think they're beginning to bottom here as well. They've been sort of the worst of the worst. And I like what's happening there. I think that the leadership of the market is sort of shifting gears here, from tech into other parts of the economy that that have not really participated yet. I also like what's happening with cruise lines and with airlines. To me, the correction that we've seen over the last handful of weeks, most of the damage was in tech, and I think that if you were a buyer on this pullback of airlines and cruise lines and all the rest, again looking at this sort of post-pandemic recovery at some point down the line. I've said this before. I think we're in the second half, the back half of this this pandemic situation, and these are the places, the sectors you ought to be in.
Right. Okay, Roger, what's your big strategy for the week?
Well, I'm going to go back to what I was telling you last week. On the 2nd of September, the S&P made all-time highs. The majority of stocks, when I say the majority, 90% of stocks faded with the S&P post September 2nd. Last week, while the S&P tried to rally and could barely get it up, enough strength to rally, the stay-at-home stocks like Peloton, Roku, Zoom, DocuSign, the same stay-at-home stocks that started this rally in February were going higher and making new highs. And if a market was really ready to turn south, I don't believe those stocks would be going higher. I don't think there would be enough capitalization or interest or liquidity to provide a new high in those stocks. So I am in agreement with the rest of the crew here, but at the same time, you have to take a look at cyclicals. So I do believe we're going to be going higher. I don't believe the rally is going to be as focused in the tech. I think it's going to be more broader rally. It's going to be led by stay-at-home stocks and defensive stocks. We're not going to see a pure tech strength anymore. I think we're past that. But at the same time, I still think there's going to be a big premium on other stay-at-home retail, consumer discretionary, consumer staples, but stocks that have more weight towards the stay-at-home environment. But with that said, the bond market has been very, very choppy. The U.S. dollar is showing some strength, but it's also in a broader scheme kind of choppy. And I don't think we're going to see any big moves from the stock market, aside from those stay-at-home stocks, till we get a better view of where the election is going. And I don't think that's going to happen for a few more weeks. So I think we're going to see kind of like volatility is going to be here. Stay-at-home stocks are going to continue making higher highs, but there's going to be few of them. The majority of the market's going to be in a wait-and-see mode. And I think we're going to start seeing some resolution with the bond market and the U.S. dollar tipping us off, and maybe even gold as well. So I think it's going to be a very choppy, sideways market for the foreseeable future.
Sure. Okay, so if we were to look at across all the sectors, we're seeing a general rally across, pretty much all asset classes, including gold and oil. And so that suggests that there is liquidity coming back to the market in a general way. And Jeff, to what extent do you think that is the market looking forward to the flu season and taking these stocks higher, taking gold higher, in anticipation of more Fed stimulus or central bank stimulus. Do you think that that's the factor that's sort of bringing a general increase in liquidity in the market today?
Yeah, this is liquidity, man. This like,
Yeah.
look, here's a concept that whether you're an investor, whether you're a trader, whether you're a monk, should ring true. Money always goes to where it's best taken care of. And right now, it's not being taken care of in interest yielding investments. And some people are chasing stocks on dividends. There's a lot of dubious dividends out there right now. There's a lot of energy companies who people think they're going to suspend or lessen their dividends because they just can't make that nut. They can't make that monthly nut. So again, if you have back in the day, you could just have a money market and get 5% for doing nothing. And a lot of pensioners have a lot of money. A lot of old people have a lot of money, and they were living and they were surviving on this. So the Fed is penalizing savers, rewarding speculators and investors on more speculative type of non-yield driven type of investments. And I do think that's a trend that's going to stay in place until you start to see yield somewhere. And what really scares me is when they talk about, the possibility of negative interest rates in the US, because it's been an unmitigated disaster in Europe and these other places. If you look at the underperformance of the European market over the last 10 years, it's night and day compared to what's happened in the US. And
Right.
unlike the US, they don't have this huge these huge tech conglomerates to acquire all the capital. So they're just seeing money flow out of the Eurozone and into places that have that type of growth.
All right, Adam, how do you feel about that?
Yeah, I agree. I also think about the next big thing to look at, which is this is the last week of the third quarter. What happens next week or the week after is the beginning of the fourth quarter. What happens at the beginning of every quarter? We get earnings season. And that's going to be a big, piece of the puzzle as well as we navigate our way through earnings season. So for all intents and purposes, the very, very near term, this is the last week of the quarter. It's usually tends to be a little bit quiet. We could see some fireworks. We do have a debate, whatever the case may be. But for the most part, unless if we see some massive selling, it should be somewhat of a quiet week, slightly higher, because usually the end of the month and end of the quarter have a slight upward bias. But, window dressing doesn't exist or it doesn't happen. And then also going forward, we enter the fourth quarter, and that'll be the last quarter of this year. Thank you for many people. And hopefully we get one day closer, to Jeff Wise' point, to a vaccine, to the end of the pandemic and getting back, life back to normal. So if we have a strong quarter for earnings and we see the market rally on the earnings or the news, that's going to be bullish and be beneficial for both Main Street and Wall Street. So until we see any major selling, the market's earned the bullish benefit of the doubt.
Okay.
And real quick, guys, keep in mind, we have GDP on Wednesday this week. So typically going into GDP, we don't have a lot of big bets going into GDP. We usually have big bets as we get closer coming out. So as far as, because you asked about this week, James, what I'm thinking this week, I think the week naturally is going to have a lot of uncertainty because of the GDP. So we have to kind of take that into account as well.
Okay, that sounds
point.
quite reasonable. Jeff, what do you feel about the increase in liquidity interest in the market?
Yeah, and obviously that's being reflected in what we saw late last week and certainly this morning. I think we're just going to see this sort of quiet transition. I think the market's going to continue to quietly build strength, choppy in the short term, as everybody else is saying, and the key is to put money to work in those areas that you're looking at for growth next year, early next year, in the middle of next year, because this is the point where a lot of those stocks are changing direction and beginning to move higher.
Okay. And Roger, I wanted to come back to you on that, because the GDP issue is, of course, something that people watch with one eye, but it is the economy and not the market. So I'm curious as to, what is the weighting that we should give to the GDP number in the context of the market, given all the other fundamental factors that will come to bear, especially in the context of the increasing liquidity we're seeing in this rally?
Well, large institutional funds, large pension funds that don't necessarily worry or care about the economy. They're simply concerned about the liquidity and when to make bets or not. there's a huge shift before the GDP because they want to remeasure their volatility levels. Because you see, if volatility is higher, they need to put less money, they need to put less equity into the market because the volatility will do the work for them. So they're constantly adjusting their positions and they're constantly taking money in and out of the bond market. And I believe the biggest factor for the stock market usually is the bond market. The bond market is what the GDP, because that's the economy. The bond market usually has the biggest impact from the GDP. So investors, traders, professional hedge fund managers don't really want to make too many big bets before that because there could be a big policy change, or if the GDP is moving one way versus the other. And I mean, we're like, if you look at the expectations, they're all over the place, negative 30%, negative 25%. It's like a black hole. So a lot of institutional investors will want to kind of wait and see, or kind of wait to dip their toe into the water till afterwards, because they don't know how that'll impact the bond market, and the bond market has a major impact on the stock market.
Mm-hmm. Okay, Jeff Z, did you want to add something to that?
I think I'd like to talk about, I mean, if we're talking about the relevance of this week, GDP is absolutely huge. And what Roger was saying about uncertainty in the numbers and it being a black hole, you know, the wider the range of expectation and possibility of outcomes, the more choppiness you get in asset pricing in general, just a rule of thumb. But for me, the big thing this week is tomorrow night. The debate is going to be a big thing. And you're going to see an instant knee-jerk poll reaction, and you're going to see an instant pricing in some of the Trump sensitive sectors. And to build on like Jeff Yasteen's point of the financials acting well, if Trump has a big knockout in the debate tomorrow night, financials are going to be on fire. They're going to be on fire because the one wet blanket being held over those stocks is the pending possibility of a Biden presidency. Financials did not do well, the first 3 years of coming out of total disaster in Obama period, but they got fined, I think collectively like $75 billion under the Obama administration. There was hyper regulation in terms of what Wall Street could do. And so that's one sector I'm looking at on a knee-jerk reaction to what happens tomorrow night. Trump hits a knockout tomorrow night, financials are going to rip this week.
Mm-hmm.
And conversely, just really quickly, conversely, if the opposite happens, look for a rally in the Russell 2000, because that has been the biggest factor for the trade war. And we know how Trump feels about the trade war. So again, just the opposite end of what Jeff, sorry, didn't mean to, just wanted to interject that.
Watch China too. Watch Chinese stocks. Watch China ETF. Watch ASHR, which is the mainland Chinese ETF.
Right.
One of the things that stuck out to me last night is you had a widespread European and Asian market rally. The Chinese stock market did not go up. Always in bull moves, pay attention to what is not rallying.
I think they're on a holiday for a week.
Are they really?
I think China started a holiday, an 8-day holiday. I read this morning. Maybe I'm wrong, but
I could be mistaken. But I saw that the market did not trade higher.
Okay.
Yeah, the holiday in China is for 1 week. You're right. It's from the 1st, I believe, until the following 8th or the 9th.
Gotcha.
So from Thursday to Thursday.
Okay. They traded last night in Shanghai, and it was down 0.06%.
Yeah, they shut down a few times a year for a week-long holiday, several times.
Right.
Yeah,
it's normal.
It starts in a couple of days, though.
Gotcha.
Okay, let's take the discussion in a whole new direction now. Tesla was reportedly announced that it's going to build a lithium hydroxide plant in Texas to supply its Terafactory battery plant. To me, that was extraordinary because it's like Tesla has decided to bypass the entire mining sector and develop its own supply chain security through participation on the production side. And that, to me, besides signaling that it might be time to go back into lithium producing companies, sort of made me wonder how that's going to affect other battery producers, particularly on the Chinese exchanges. And I'm going to start with Jeff Yasteen this time, just because I'm just throwing the darts now.
I think it's fascinating what Tesla's doing. As a company, I'm just always concerned the amount of capital that they consume, and the profits, and they are showing profits. There's no doubt about it. But most of that seems to be related to sale of carbon emission credits more so than anything else. So I have my concerns about that, but to me, it just points out sort of the bigger trend here, which is, mainly, putting money to work in, as you were saying, maybe the lithium stocks, nickel, all the usual sort of base metals, and you can make a case for those beyond, obviously, just what's this broad transition in coming years to some sort of electric vehicle, broader footprint in not just the U.S. but globally. It's going to take years. So obviously, if you're looking at it from that direction, there are many years in which to develop the mining capacity, et cetera, regardless of whether this sort of gamble that Tesla's making here, as you were saying, to secure their own source materials, pays off or not.
Sure. Roger, did that make any sort of change in your attitude towards lithium or the lithium stocks?
No, because I've been really hot on lithium stocks and evergreen energy for the last 7-8 months. I've been all over it. This just reinforces what I've been saying, and I'm actually looking for Tesla to trade above 460. I have I think once it trades right above 460, 465-ish, that's a buy entry for me. I'm looking for it to trade a little higher. I'm a little uncertain, and I think we're going to consolidate, as I mentioned, for a lot of the period prior to the election. So I want to see it tear the most recent high before going long. But no, this just confirms, actually, it confirms something that sorry, there's two Jeffs here. Jeff Zaneri has been talking about for a long time, that people have to start looking at Tesla as more than a car company, that it's a lot more than that. It's an alternative energy company. And I think this is just part of their bigger plan. I think their investors like this. I think it's added diversification, and I think they're thinking ahead. And my hats are off to them, honestly. It's just another confirmation that they are moving in the right direction.
You bet. All right, gentlemen, we're going to leave it there for now. I'll look forward to speaking to each of you individually throughout the week. Thank you very much for your participation. Have a great day.